Hey guys, I'm reposting my Ethereum Classic video because I had some technical difficulties with the last update. So this will be a relatively quick update, but I'll go over the same content. Should be better at it because it's my second time doing it. But in short, we are in quite a breather right now. It's been several days, actually a few weeks, and this looks like possibly some kind of a fourth wave correction in our larger rally structure up. Ethereum Classic is not the only exception to this because we're seeing the same action across cryptos. And as of now, we're seeing pretty good pullback across pretty much every asset class, including equities and energy and various others. So the sentiment is temporarily taking a pause, but that means we may be able to set up more upside ahead. This is the pattern that I have right now in operation, with this low being on January 22nd. This is a little different from the rest of most of the cryptos because most of them actually hit a lower low on February 24th, but Ethereum Classic did not have that happen. And that could explain partially why we had such a powerful rally over the past several weeks, with Ethereum Classic running ahead of pretty much everything except for probably Solana. So I have this initial structure as an A, or as a first wave, this as a second wave, and we are well past, well, we're actually well within the range of a third wave. We actually shouldn't have gone past 1.618 extension of this if this were a third wave, but we can have distortions, we can have stretches, stretch third wave, extensions, things like that. The other alternative could be that we had a truncated fifth wave, with the fourth wave being somewhere back here, and this being maybe the top of the actual fifth wave. Whatever the case, we need to hold support at about 39,188. We haven't gotten anywhere near that yet, and we just fell short of the Fibonacci extension above that at 42.90. That's the 1.236 extension. So we may have a little bit lower to go before we're done, or we may be off to the races already. This could already be 5 up with a nested setup going. We'll have to see how this materializes as we go. The alternate that's not really pictured here is that this is 3 waves up. There's no way to ignore that fact, and we could easily interpret this initial wave here as a 3-wave pattern up, and this could be a B wave, and therefore we could have a C wave up, which may mean that we have that lower low on the way still. So we're not out of the woods yet, although the probability of that has diminished. However, if we do see a strong 5-wave pattern down, that could be indicative of the beginning of quite the meltdown. But I'm not seeing that as a strong possibility, as I mentioned. And when we look at this more closely, we do have a 5-wave impulse here, 3, 4, 5, but this looks like a C wave of the larger fourth wave. So you have an A, possibly a B, and a C, and fourth waves are ugly, and that's what we have there. It's a lot of whipsaw, a lot of up and down. It's not totally clear, but that is what we have at the moment. This is the big picture long-term chart, the daily view, and this is available in the description below, so be sure to check it out at that link. But I've made some changes to clarify the nomenclature. So first off, we have our red pattern, which is the bearish pattern that I just went over. We'd have to break our support down below. That would be right at about, what is it, 21,239? Yeah, so $21.23-ish. If we break that, we're probably making a visit into this box below, around 14.25 down to possibly as low as $5 range, something like that. But we need to see more of a spike down to get us set up for such a pullback. In the big picture, you can see that this looks like a healthy consolidation. There's nothing spiky about it coming down. We went over the MACD, the MACD last time, and we are seeing the right divergences, and we are overbought at the moment when you look at this up close, which is a good sign that we are in some form of a third wave. So that is a good thing. We need to complete this fourth wave, and we need to see some divergence as we go a little bit higher. That would give us a complete 5-wave up. Now, here's where things get interesting. Our primary pattern used to be this green pattern that is now, it's been relegated to being the alt pattern. And this calls this entire thing being in as being in an impulsive rally. So we have possibly a 1-2, maybe a 1-2-3 setup, or it's a 1-2 and a 1-2 setup. Either way, we would expect ourselves to rally at least in that box. And where I have what I'm showing as the A wave of the purple, that's about how I would expect a possible first wave to hit. And then you have a second wave pullback, and then we would rocket right through all our resistances very quickly if this were following the green pattern. However, purple pattern is primary, and that is for a reason. And because we have very deep retraces in the past, it's not as apparent in Ethereum Classic, but in other cryptos, we have a very deep retrace for what we're calling the fourth wave of our diagonal. So that's what this purple pattern, purple nomenclature is showing here. So that calls for this entire rally from 2016 all the way to 2018, early 2018 as being a major wave one, this pullback being a major wave two, and we've already had our third wave and we finished a fourth wave possibly. We're about to start the fifth wave. This too has some issues because the fourth wave probably should have gone deeper if it is a diagonal. So we'll take what we can get. We'll see if we have something unconventional. There are other ways to interpret this as well. Ethereum Classic is a bit unusual because in many cryptos, we had a clear bottom here and a higher low here. In other cryptos, you have a clear lower low in March of 2020. In Ethereum Classic, you have almost a double bottom. You could argue that this is actually a slightly higher low, but they look very similar. So you can argue that this is actually the proper first wave, with this being the second wave, and we've had a third wave blow off, although it's actually gone so high, it's hard to make that argument too. So all these patterns are a little ambiguous, but overall, we have plenty of reason to believe that we are going a bit higher. Now we take a closer look at what we're expecting to see next. Because I'm expecting a diagonal kind of rally, C wave being way up here, the subwaves within a diagonal do break down as three wave zigzags, ABCs. So therefore, this rally into the box would presumably be an A wave, and A waves are often, more often than not, three wave patterns. That's what I have with this blue pattern here. So we may already have our A wave in place, with a B wave pullback in progress, with a C wave that will launch us right in that box. That C wave should take impulsive form, so 5 waves. If we get that, that's a strong sign that we are following the diagonal pattern. However, A waves can also be impulsive, so we may have maybe a smaller impulse, and then maybe we have a larger impulse get us in that box. So again, impulses are 5 waves. If we have that, it would not rule out that we are going purple. So again, this could be a first wave for the green, second wave for the green, and then we would go a little bit higher. There are other interpretations as well, but we're going to work with what we have. The truth is, again, we may not be able to tell which pattern we're following for quite a while. It may look exactly the same after getting this box and we pull back and we rocket back up past the previous high. There's a strong Fibonacci confluence right here around the $1,000 mark. So blasting right through that would give us a strong indication that we may be following green. I believe the ideal third wave, major third wave, falls somewhere between the 1156 all the way as high as $5,000. So if we are following green, it will become very obvious by the time we cross $1,000. If we continue to accelerate, that would be a very good sign. However, if we start to lose momentum and start going sideways, it would be more indicative that we are falling purple. Now, timing-wise, this is where things get a little interesting because I'm counting Ethereum Classic a bit differently. I'm expecting us to see some pretty good action this summer into the winter. Many of the cryptos are showing that our third wave top, or whatever this top will be, the next big rally spike would fall somewhere in later this year into earlier next year. In Elliott wave theory, we don't put as much of a premium on timing projections because we're all about price projections more than timing. So if you look at where these diagonal trend channels cross each other, we have estimates from January 2023. We have much more conservative estimates later, but keep in mind that we do sometimes have what we call a throwover, in which we actually get past, we break through the top channel trend line. So that would not be surprising at all, but more for the most part, again, we're setting up for some upside ahead. I don't see any reason we wouldn't expect to see a bit more. May see a bit of a deep pullback in the short term if this does turn out being more of a second wave, something like that. We'll see how it goes. If you do like Ethereum Classic, as I always like to mention, don't just put everything into one crypto or one altcoin. These are high risk, high reward plays. So don't forget to diversify across 7, 8, 9 different altcoins. I've done the same thing because you never know which ones may or may not outperform. We've been very fortunate that Ethereum Classic's been doing really well, outperforming most of the rest of the space. But late last year, we had Polygon outperform, we had Solana outperform, while other coins underperform. So you never know where you're going to go with that. I'm going to have plenty more updates on Ethereum Classic, as well as all the other cryptos, the other altcoins that I follow, as well as other asset classes. So subscribe, that way you don't miss those. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.